The world of cryptocurrency definitely can be confusing, especially for new investors. So today we're going to look into how cryptocurrency works in more detail, and we're going to understand the technology behind digital currencies. First, we're going to ask what a cryptocurrency actually is. And a cryptocurrency can be described as a digital or virtual currency secured by cryptography. It operates on a decentralized network using blockchain technology. And common examples of cryptos that you may have heard of could include Bitcoin, Ethereum, and even Binance Coin. How does this technology work? Well, it all comes from the blockchain. A blockchain is a distributed ledger that records transactions. People often mine crypto. The process of validating and adding transactions to the blockchain, that is a definition of mining. Then we have wallets. Wallets are digital tools used to store, send, and receive cryptocurrency. Then we've got the cryptography. This ensures security and authenticity of transactions. This is kind of the underlying fundamentals of crypto. There are a few key features to be aware of when it comes to cryptocurrencies. Number one is a decentralization. This operates on a peer-to-peer network without a central authority. That means that there are no central banks or anything like that which are generally in control. Then we can talk about transparency. All transactions are recorded on a public ledger, meaning that everybody can see all transactions. Then we've got the security element, as advanced cryptographic techniques protect user data. There's a global access element, as crypto can be used by anyone, anywhere in the world with internet access. A lot of cryptocurrencies also have a limited supply. Now, this doesn't apply for all, but many do. An example of this could be Bitcoin's 21 million market cap. This one you need to be aware of, research whether this is true for the crypto in case, but in Bitcoin, for example, we know that there is a 21 million market cap. What is a blockchain though? The blockchain is simply a chain of blocks where each block contains transaction data. It's really quite simple when you word it like that. Each block is linked to the previous one, and this creates an immutable record. There are nodes, computers, which then validate and maintain the network. So basically, this makes it quite secure, and it makes it easy again to record transaction data. The transaction process itself is something which can be described in these 4 steps. Number 1, a user initiates a transaction using their digital wallet. Number 2, the transaction is broadcasted to the network. Number 3, miners validate the transaction and add it to a block. Once added, the transaction is permanent and visible to everybody on the blockchain. But how is cryptocurrency actually verified? Well, there is proof of work, where miners solve complex problems to validate transactions. There is also proof of stake. Validators are chosen based on the amount of cryptocurrency they hold. Then there are some other methods, and of course this can vary, but these may include delegated proof of stake or proof of authority. Why would anybody actually use cryptocurrency though? Because a lot of people invest in it, but many people actually use it as a currency. There are a number of great reasons for this. It's decentralized, so there is no reliance on any centralized banks. There is a fast flow of transactions, and this is especially true for international transfers. There's low fees. You can oftentimes avoid high transaction costs, which may be found with other traditional methods. It often adds an element of privacy. There's also an innovation element, and this depends again on the crypto itself, but it often allows new financial systems, like for example DeFi, decentralized finance. It's a very innovative way of dealing with payments, I suppose. Of course, like anything, there are many downsides with crypto. It can be a lot more volatile, as prices can fluctuate dramatically. Often, there are various regulations around different parts of the world. Security risks, as wallets and exchanges could be hacked. Then there's the complexity of it, as it requires some technical understanding to truly get your head around. Arguably, there are environmental concerns, as there can be high energy uses related to mining. Where is crypto actually used though? Payments, that's a good way. Often it's accepted by online retailers and merchants. Investments, I'm sure a lot of you guys will be aware of this. It's often considered to be a digital asset or a store of value. Smart contracts is another way. It automates agreements without intermediaries, such as Ethereum, for an example. Then we've got NFTs, unique digital assets used for art and gaming. And as we spoke about before, cross-border transfers, which is oftentimes faster and cheaper than traditional methods, making it a very good way to pay for international transfers. What is actually next, and what's coming next in the world of crypto though? Often we're looking at increased adoption by businesses and governments. Take Bitcoin for example, right? Look at how much attention has been on Bitcoin over the past couple of years. It's likely that a lot more people will be aware of crypto going forwards. Development of eco-friendly blockchain technologies. This is something to look forward to in the future. As we've spoken about, with more people being aware of it, we likely could see integration with traditional financial systems, which would be very interesting. And there's also a real potential for innovation in industries beyond finance, such as healthcare and supply chain. It really is a revolutionary technology, as cryptocurrency is reshaping how we think about money and the financial systems as a whole. It offers opportunities, but requires some understanding and caution. So be informed, research, and please do explore responsibly. Be aware of the risk. It's not all potentially upside. It comes with some challenge. Then we can speak about the fact that people invest in crypto. Why do people want to do this? Why do so many people choose to do this? And perhaps this is the part of the video that you've been waiting for the most. Cryptocurrency often offers high growth potential. Just look at currencies like Bitcoin and Ethereum. They have shown significant long-term gains. There is often the decentralization element. There is an element of freedom from traditional financial institutions and government control. Then we can talk about portfolio diversification, as it adds variety to investment portfolios, and it acts often as a hedge against inflation to many investors. There's the accessibility. Crypto is a very easy asset to start investing in, with many platforms now offering it globally. Then we've got the early adoption opportunity. At the minute, not many places even accept Bitcoin or have acknowledged the potential of it. So a lot of people see this as an early window, an early opportunity, and something that could see growth going forwards into a larger, innovative financial ecosystem. Honestly, cryptocurrency is a really interesting technology, and it's going to be interesting to see where it goes in the future. I just wanted to make a short video explaining the absolute basics for beginners, so I hope it was useful. If you enjoyed, don't forget to leave a like and subscribe. Thank you for watching.